A lot's happened politically in the last few hours. The President has taken his oath of office, but since his election by Parliament on Friday, the Rand, the JSE, the bond markets have all been moving into positive territory. In other words, it appears markets and investors generally are excited about the new government. Sifiso Skenjana, Economist and Managing Director at ESG. Sifiso, good afternoon to you and thank you for your time. Why are markets welcoming this government? Well, they seem to be. What is it about this coalition that they seem to like?
Good afternoon, Stephen, and of course to the viewers at home. I think as I was trying to make sense of this, Stephen, there's a bit of research I was doing that really I think was quite interesting, and I think in explaining the story as is. And it talks about kind of the circulatory capital and democracy, and looking at specifically, it zeroes in on Brazil and South Africa as a case study. And what it found is that, in essence, the market, the proverbial market, as we call it in inverted commas, has this relationship that it has insofar as in one way celebrating democracy, but only on the terms that neoliberalism comes ahead of any social agenda on that democratic process. And so what happens is that they found that in a South African context, the market tends to, attribute this arbitrary risk premium when the state tends to follow more socialist programs, even in terms of economic justice that is underpinned within the construct of democracy. And so I think what they like about this is that it probably presupposes some neoliberalism insofar as where the state of the economy is going, but of course at the expense of any social programs.
Could it also be, I mean, things can go in lots of directions here. Yes, the DA is sort of to the right of the ANC, and Umkhonto we Sizwe and the EFF are to the left of the ANC. But I would suggest that the EFF and MK are much further to the left of the ANC than the DA is to the right of the ANC. And I'm reminded of what happened to Liz Truss's government in the UK. It was really markets there who pushed her out for being too right-wing. So in other words, is this maybe about just wanting some form of, I suppose, less radical action, whatever that may be?
Yeah, I mean, Stephen, this is to the point that I was making around what radicalism looks like in the context and the way in which markets consume it. I mean, the Rand is the 19th most traded currency in the world. What informs that? One, it is our interest rate differential between, the developed markets as well as what they can get on our bond markets. Two is, of course, then the sentiment component, which I was talking about, this arbitrary risk premium that is associated with that. And then, so when you think about that radicalism component and say how much of it is then going to be associated with potentially programs that are EFF focused. When you go back to 1994 and the journey from the RDP to GEAR as two economic, policy frameworks that we adopted, one of the things that was a challenge there is around the funding mechanism for a social redistributive program, which was RDP. Whereas when you look at GEAR, it seemed to be kind of privatization first, let the market determine itself. And those are all the things that the DA has been talking about. And this is, for me, the neoliberalism that seems to come at the expense of any social development program or social agenda, which is also espoused in the definition, of course, of inclusive justice and economic justice under the espouses of democracy.
There will be a new cabinet soon. The President will have to make an announcement. Is that going to be an important signal, one way or another, for investors, who the finance minister is, who the sort of economic cluster ministers are, that kind of thing? Will that send a big signal?
Yeah, I mean, I think it certainly will, in terms of which of the core portfolios. I mean, the argument has always been that the economy is really held together by a number of core portfolios. Minister of Finance, of course, being quite key there, who the Deputy President is quite key. And of course, then the portfolio that oversees key state assets. And so you're looking at state-owned enterprises there. And so there's going to be a big, oversight function that is going to be, double-clicked on that. But I think also just looking at some of the developments as well around this currency component, Stephen. I was looking at forward markets, which is often kind of the derivatives market that ultimately inform how our currency moves, and the extent to which that market has grown compared to central bank reserves. And what that means is that the impact and the value of currency speculation is becoming disproportionately larger compared to the actual reserves that central banks have. And so for an emerging currency like South Africa, you find yourself at the mercy of those currency speculators, looking at a 5,000 times differential now between what is in existence in terms of Federal Reserves as well as the size of that forward currency market. So looking at that from a speculation point of view, as well as, of course, then, the kind of the fundamentals of governance and government, I think it's really going to be an interesting one to see as we go forward.
Sifiso, I mean, what I'm going to say has been said so many times, that the biggest problem we face over the longer term is actually just creating jobs, and particularly for younger people. So now we have a coalition government, and I think many people will be hoping one way or another that having people from more parties in the room may create better economic policy. Of course, it may go completely in the other direction. They may just argue all the time. But where do you even start? And there's certain obvious things. You start by making sure government works. So that would be things like load shedding. You start by making sure Transnet works. After that, where do you go from there? Because that is the biggest problem.
Well, I mean, there are two things to look into that, Stephen. So I saw a bit of research as well, looking at the history of second-term presidents from 1901 to 2009 in America, and they found that only 3 out of the 11 presidents had better outcomes in their second terms. And so I think before we even talk coalitions, I think it presupposes that we're probably going to have an environment where President Ramaphosa wasn't going to have a good performance from an employment point of view, as well as economic performance, just by virtue of the literature that we've observed. And then when you look at coalitions specifically, I mean, we looked at case studies in Australia and in England as well. And in Australia, the investment towards active labor, LMPs, active labor market programs, there was a disinvestment that started taking place there. Youth outcomes from an employment point of view really started regressing in England as well. And so what you see in the coalition government, unfortunately, is that employment outcomes tend to regress. And so to the question and say, well, if we then understand that as kind of some of the historical case studies we can make reference to, where do we start? For me, Stephen, I think we've really got to look at funding mechanisms for small and medium enterprises. And so we've really got to bolster that department. They've already got infrastructure in place in terms of really, I think, starting to solve for the second economy in South Africa. The second issue is really around ensuring that, a vocational skills space, the TVET colleges really come into mainstream economy. I saw now from the PNet jobs report that, fitments and plumbing and all of those are actually the 4th most demanded jobs on the demand side. And so there's great demand coming in from that space, but we've got to, of course, elevate those, opportunities. That's really, I think, the spaces that really have, good absorption rate for young people. And also, I think, may start to meaningfully solve, I think, for the big vacuum that we've got in the second economy.
So, Sifiso, I mean, many people will say we can grow the economy because we've done it before. We did it in the early 2000s. But it was such a different time. It wasn't just a different time here. It was a different time in other parts of the world, too. Is the situation in the rest of the world, the situation in Gaza, the war in Ukraine, China may be suffering from deflation? Certainly, I think there's probably going to be less demand for some of our commodities coming from China. Is the rest of the global economy maybe against us a little bit? I suppose you're going to say, well, let's have a look at the United States. They seem to be doing all right.
I mean, Stephen, I think at the time, of course, there was a kind of the commodity super cycle, as we called it. And of course, we were a commodity-driven country. And so I think we got some headwinds. And also we're coming off a low base of the crisis in 2001, 2002. And so I think when you look at those growth numbers, I think we've got to look at them in context. What's happening in a today context, I mean, we've seen now the China outpacing US in terms of R&D. And so there's definitely localization, trends towards localization or internalization of industry. And so that's happening globally. And so that's also going to put pressure pressure in South Africa in terms of how do we then not allow ourselves to be exposed to then an incidence where we're going to have a growth in import intensity because we haven't double-clicked in terms of our local industry development. And so we've got to make sure we tick that box and around local industry development. And then we also got to make sure that then the sectors that we ensure that we're double-clicking on are the sectors that can absorb the labor force we have, which is 76% semi-skilled and unskilled, can absorb unemployed people, where 91% of those unemployed people have a matric or less. And so the structural transformation, as we think about pockets of investing and I think the localization of industry, has also got to be fit for purpose in the context of the skills that we got. And so all the geopolitics, I think, are going to accelerate the rate at which we are doing this local economy internalization, Stephen, and therefore I think is going to put a hell of a lot more pressure in a money-scarce economy like South Africa in terms of really, I think, accelerating that investment profile to ensure that we are responding to the global pressures that are taking place.
Sifiso Skenjana, thank you. Economist, Managing Director at ESG. Really do appreciate